Hello everyone. So we have here Arvind Kothari from Nivesha, Piyush Mehta from Caprize Investment, and Vineet Mittal from Navitas Green Solutions Pvt Limited. So they all three are in Shanghai and they are attending solar fair over there. So let's start with Arvind Kothari. What are their key takeaways from there?
Hi everyone. I hope you all are well. It is a very good experience that we are having here in Shanghai. The interactions over the past 2 years have made us believe that the India growth story in solar has just begun, and maybe the Chinese solar story is facing a lot of maybe medium term issues, which is in a way making a lot of materials and a lot of capital goods cheaper for our countries because the industry over here is oversupplied, and hence any manufacturer that we are talking for a solar cell manufacturing line or a module manufacturing line, they want to support manufacturing in India and provide at reasonable cost. And hence, we guess that the overall manufacturing of cells and modules in our country will see a very good runway in the coming 2-3 years. And whoever is capitalizing on these years, we guess are well placed for the coming 7 years. I have Vineet and Piyush with me. Both have also had their own experiences, and I'd like them to share a bit, and then we can take it up for questions. Okay.
Hi, I'm Vineet Mittal from Navitas Solar. We are the Indian solar manufacturing company in the industry for the last 11 years. So it's like a yearly routine experience for us to come to this exhibition called SNEC somewhere around May and June, barring the 1 or 2 years of COVID when it was not operational. We have been coming here and seeing the whole exhibition grow like anything. This year, they have changed the venue to a much bigger space, 16 big domes. Our guess is it would cross 6 to 7 lakh footfall. It was, I think, 6 lakh last year. It might be 7 lakh to 8 lakh, maybe more. These are broad numbers. Overall, the industry is growing, no doubt. The sector is growing because of the global attention to renewables and everything. The cost going down and becoming more affordable. But because there is intense competition, the focus on technology is at the utmost. We talk to any manufacturer, any equipment supplier, they're talking 3 years ahead, 5 years ahead. Things like Perovsky and Tandem, which were just theoretical. Now they are displaying their products on their boards. They are able to showcase the efficiency levels. The roadmap is already there. We will bring a certain product in 2025, 2027, 2030. They have a roadmap for 2032. Upwards of 32 and 33% cell efficiencies, which was not heard of. Couple of years before, we would assume or think that 25, 26% is a theoretical upper side of a solar cell. It won't grow beyond that. But they have surpassed all such technological ceilings. And I think for us in India, the learning part is that there is so much to apply for, if not invent, at least apply for. And it's in a way very good for our country, taking lesser space, higher efficiency products with the lowest cost possible. With whatever duty structures we have, it is still a very low cost energy generation product. So we will discuss more as and when in this program. Thank you.
Hi everyone, this is Piyush here. I'm the CRM partner in Caprize Investment Managers. I think what we've heard about China in terms of size, it's really, really true. As Vineet mentioned, the size of the conference, the kind of size of the companies that we've seen here, it's truly magnificent. While China continues to have, more than 1,000 gigawatts of capacity, and it will continue to remain the world's factory for modules and cells for years to come. Now, this essentially implies that the cell prices and module prices will continue to remain. And the stability for the Indian module manufacturer is here to stay. And I think for the next 3 to 5 years, we'll see this very sustainable growth in most of these companies. I think a lot has been spoke on technology as well. While most of the Indian manufacturers would be on monoperk, I think we've met a lot of companies here who've spoken about TopCon and HJT, which is heterojunction technology. Now, 75% of China's cell capacity is still TopCon. But so the natural assumption is that, India will migrate to that technology as well. But again, none of the cycles has been proven for heterojunction or for HJT. So I think that the situation still remains fluid. And the larger companies in China like Jinko, Trina, Longi, GA Solar, they are facing a lot of headwinds. A lot of pain we've seen amongst a lot of smaller companies as well. In fact, a lot of smaller companies where small in China means 15 gigawatts, 20 gigawatts companies are near the brink of bankruptcy as well. So eventually the profit pool will continue to be concentrated amongst the top 4 to 5 players. And that is a trend we'll see in India as well, where large part of the profit pool for Indian solar manufacturers will be concentrated between the top 7, 8 players. And we've also met few companies on battery storage side and green hydrogen side. And I think we are still a long way away. While battery storage technology is proven, green hydrogen continues to remain operationally challenging due to cost and transportation. So near term remains only a story. So these have been our takeaways from the conference. And I think as 3 of us are on the same page when we say the India story for the renewable space has a clear runway for the next 5 years. Questions are welcome now.
Yeah. And one more thing I want to add, that it has been perplexing for a lot of investors to invest in solar since COVID because they've seen prices, go down. But a very unique thing about solar in India is that with ALMM and a lot of our policies in place, the government has very nicely protected our local manufacturing industry to give them cash flows to do backward integration in cell and through PLI, encouraging the value chain in our country. So if you want to understand India, what we now come to know from China is that China had a phase where government had policies which were supportive. And we had the world largest guys emerge, like, Piyush was just mentioning about the Longis of the world, the JAs of the world, the Jinkos of the world. There is an opportunity for our country that if this policy framework remains, the prices that are going down are supportive for the solar sector in India. It is not that it is going against them because we get technology at a lower cost. We are getting materials at a lower cost. And that is what in a phase where we are scaling up. So if this means more cash flows for the companies, they will be able to afford technology, innovate, and hence we complete the whole value chain in our country. So this is what our sense over the past 2 days has been.
And I think it is very important to understand that most of the investors ask us that the prices are falling. What about the company? What will happen to their profits? We have to first understand that as of today, Indian companies are pure assemblers. We need to look at gross profit per watt for each of these companies, which has largely remained stable for the last 5, 6 years, irrespective of what has happened to the module prices or cell prices. So as long as your gross profit per watt is intact, I think the profitability is here to stay. So investors need to keep that in mind while they are thinking to invest in this space.
And what Piyush has, just mentioned, if you look at the data point, the cell prices, I guess Vineet would have more data to share, that in China have crashed between 60 to 70% last year. But the India cell prices are at the same price. This is because the government has been promoting the DCR requirement. And the DCR requirement means that the cell needs to be procured from our own country. And if the Chinese cell is currently 3.5 to 4 cents, Indian cell still sells at 15 cents. And that means that the profit pool in our country is getting protected and giving cash flows to these companies to expand. I guess there is no reason for us to challenge this thesis that the government or the players currently have. that this industry has bleeded for over a decade in our country because of Chinese imports dumping everything. And now maybe 5 to 7 years, we need to make the profit pool required for our industry to reach a respectable level. We can now take your questions, I guess.
Thank you so much. So we have first question over here is that already this space is overvalued. So how we are looking at this industry from here on?
So if you look at
So do you think
the
this
past earnings, yeah. So if you look at the past earnings have not been, giving a clear picture of what the future lies ahead. Because if you look at even last year, companies like Navitas or other companies might have had short-term inventory losses because you have sell prices going up, sell prices going down. Because post-COVID, there was a very volatile shipping environment and a lot of things, changed. Right? The important point over here is most of the players in India now are making a pass-through of whatever sell cost is there. So they are working in a way converters where their margins or their EBITDA per megawatt that they make are converting towards, ROE for the companies of around 25, 28%. If this continues and the growth that is there around 40, 50%, for all these players, the kind of demand that we've been seeing, and with LMM in place, if the Chinese import don't come, this looks to continue for the coming 3, 4 years. That is where we believe the valuations need to be, analyzed rather than what past has been. Maybe Piyush can throw more light on that.
So I think it is very important to understand that what these companies have done over the past 5, 7 years, they'll be achieving in the next 1 year. So if you continue to be anchored on what has been the profitability over the past 5 years, I can tell you that what profits they've made over the past 5 years, they could end up making in the next 1 to 2 years. So the profits are growing exponentially. We are talking about multiplying profits and not compounding profits. And when you build that into your estimate, you'll still see that companies like Wari, Vikram, other listed companies like Insulation Energy, most of these companies would be trading sub 20 times or sub 15 times 2 year forward. So I think looking at trailing 12 months P, I think you'll be harming your own investment analysis.
Yeah. I mean, I'm not an investor. I'm not a banker here. But I think when we talk about having overvaluations or euphoria, I think we are missing out on the huge opportunity that India is sitting upon. Whether we talk about valuation, that's a very completely different story. But there is no denying of the fact that the sector is going to grow leaps and bounds. We were stuck between 10 to 12, 15 gigawatt a year. This year, definitely, we are going to cross 30, which is a big jump after 3 to 4 years. And it is going to grow maybe 35 or 40 gigawatts in the coming years. The only challenge, I think, is not technology. It is going to be the infra, road access, and sorry, the land availability and transmission infra. But apart from that, the policies are quite positive. Government is coming out with tender almost every single week, and in different segments of the sector, be it a small residential rooftop and the Surya Ghar scheme, the Kusum program, where the mid-size investors are able to invest, and the mid-size suppliers are able to supply in those projects. And then the utility projects, whether it is plain vanilla solar, hybrid with solar, wind, hybrid with battery, hybrid with pump storage. So there's immense transformation of the whole energy sector. We are not doing a green business. It's a whole change of the existing infra into a new economy, green economy. So there can be some exceptions here and there, but on a broad level, at least on the business side, I can be very confident that business is going to grow. Valuation is a factor of averaging. It will happen over the 3 to 5 year period. So again, I don't need to maybe comment much, but on a sure level, that sector is continuing to grow.
I think valuations are also looked in terms of the target addressable market. I think we fail to understand that India is where China was in 2016. And on a overall basis, we are at 78 gigawatts. And if you look at the peak capacity and no new thermal capacity coming by 2030, uh, the growth that we are seeing on energy consumption, India will need 25 to 30 gigawatts of renewable energy installation capacity every year. For that, I think the installations will have to be 4x, 5x of what we need. So if we need 25 gigawatts of energy, I need to install somewhere close to 100 to 125 gigawatts. And this is not just a 5-year trend. This, I think, will go beyond 2030 and maybe even beyond 2035. So that you have to adjust to valuations.
And also people who have, had the similar mindset when maybe the, technology or the software industry in India was growing. Maybe when the IT sector in, the 90s was booming and dot-com bubble happened and a lot of valuation crashed. But the point was that the Indian technology space, IT space, maintained their run rate of growth. And that made those companies multi-baggers. So when you have the growth sustaining, even commoditized businesses, which people, say that there is no moat in Indian IT, is just, the cheap engineers that we have over here or things like that. The point is the same thing has repeated over and over again in multiple businesses. And if the growth sustains, the return ratios are good, those sectors have always done well. So if we are looking at the long-term trend where the sector itself is growing fast, I guess there'll be a lot of companies which will be increasing the profit pool, and then they will attract a lot of institutional investors, and that is when I guess valuations will start to become expensive. Yeah.
So next question is that in the whole value chain of solar, so module have started manufacturing in India. So what else can be indigenized over other thing in the value chain?
I think modules have been getting manufactured in India way back in 1987, 88. So it's not a new product, definitely. We have been manufacturing modules as per use case of Indian conditions. Definitely last couple of years, we have seen a major jump in the capacity additions, in technology, in automation. But module manufacturing has been a very quite 3-decade, 4-decade old business. Upwards of the value chain, next couple of years, we will see a slot of solar cell manufacturing. I think at least 20-30 gigawatt of cell manufacturing will come online. Like us, there were like at least 10 manufacturers who are negotiating, who have finalized orders with the cell equipment suppliers here. And the equipment suppliers are all global, whether it is Chinese, some are German, some are integrated between the two. Apart from that, under the PLI, the larger companies have their mandate of going upwards till ingot, wafer, and silicon, polysilicon. So we are going to see those factories come up in next 3 to 4 years. On the overall ecosystem, we have seen glass manufacturing grown from 1 player to 5. We have seen EVA manufacturing grown from one large player to at least 8 or 9 medium size and large size companies, which are enough to supply the current demand. We have seen a lot of ribbon suppliers. Aluminum frame extrusion is becoming a very big business suddenly. It was always there in the window and other businesses, but the solar aluminum frame has become very big. 50 to 100 crore capex is a sweet spot in that market as well. So we are seeing a lot of other manufacturing related to solar and non-solar, say inverters, cables, lot of things.
And this has happened in a lot of ecosystems, right? You think about the pharma ecosystem, the chemical ecosystem. Indians have never been, way behind once they've been given an opportunity. So I guess the ecosystem was missing all these years. As Vineet rightly said, me and Piyush might have met at least 10 to 12 manufacturers out of India over here to, discussing about capex in cell or maybe module. And mostly everyone is talking out the cell. They want to expand in a couple of years or next year or 3 years. So if the cell ecosystem is going to be in our country, so we go one step backwards, then we go one step back. So the whole ecosystem gets backward integrated as and when the players, plan those capacities. So in fact, this is a year which I guess a lot of these companies would be earning excellent cash flows. They'll be self-sustaining most of their capexes, or they'll be raising capital. They'll be going in the markets, and we've raised a couple of rounds for companies Piyush has raised. So, and I guess if the sector continues to do well and the investor interest is good as it is right now, there will be an ecosystem in our country, and we all can be surprised by how we were surprised in chemicals, pharma, and other sectors.
And I think when you're looking at the supply chain, you have to think about the sector as module manufacturer, EPC companies, and everyone else. And when you look at the sector, you also look at the profit pool. So 40 to 45% of the profit pool will be concentrated with the module manufacturers. Another 40-45% stays concentrated with EPC companies. And balance 10% will be a lot of ancillary businesses, whether it is transformers, transformer oils, and a lot of new businesses will come up around it. So while within modules, the profit pool, as I said, is concentrated between the top 7-8 players. For the EPC side profit pool, it will be concentrated between at least 30-40 players. But there the ratios will be far, far better in terms of ROEs and ROCs and asset turns. That's why they will always trade at a premium. So you'll have to look at the entire supply chain and where the profit pool is concentrated.
So next question is that, so today India has around 60 gigawatts of module manufacturing, but cell is around 20 gigawatts. So how long we are seeing dependency on China with respect to the cell and the knowledge sharing?
So whatever capacity we have in the solar modules, generally it is monopack. There is a shelf life to it, new technologies. Monopack has been in the market for last 3-4 years. And now it is at the, I won't say the fag end of the technology, but it is, the TOPCon has come up quite rapidly. So although we have 60 gigawatt, not all of it will be useful for large utility developers, purely because of the fact that TOPCon capacities have increased and their prices have gone down. So that ratio will be, the difference will be slightly reduced. Cell manufacturing, in fact, is not even 20 right now. As per my understanding, it is still below 10. But next year, or maybe early second half of next year beyond, we would be seeing 30-40 gigawatt of cell manufacturing in India. So that gap is going to be quite reduced. And once we see a government protecting the cell manufacturing like the module manufacturing, ALMM, there is a talks like approved list of cell manufacturers. I don't know. There has been talks around. So minister has already announced those kind of plans in the previous government. So the gap will continue to reduce, and there is going to be a decent profitability in the cell manufacturing purely because of the complexity of the manufacturing process.
And we also need to look at what amount of equipment do we want to export, right? So one is the India market. But if you look at the past 3 years, one of the leading manufacturers in our country has his order book as high as 50,000 crores from the US alone. So if you look at the policies around the world, maybe Europe hasn't been supportive, but there are talks on similar lines that there'll be anti-dumping duties in Europe as well. So world needs a supply chain which is, maybe X of China, and no other country is developing ecosystem as fast as our country is making. So there has to be a domestic demand that we need to suffice, and also an export demand that we need to cater to. And what Vineet said, because technology is changing fast, and what Piyush rightly said, that the top notch, 5 to 7 players would almost rule the market, and they'll be the players who would have backward integration. What is clear from this exhibition is that only players who are backward integrated in the long run would be making bulk of the profitable pool, and they'll be the ones who would rule, I guess, the capacity expansions as well. So we need to look at player by player, how they're expanding, because smaller guys like in China also are shutting down right now. That will happen in India as well.
And I think make no mistake about it that China will continue to remain the centerpiece in the world. While Indian players are talking about adding 4 gigawatts, 3 gigawatts, 2 gigawatts, companies like Longi talk about adding 40 gigawatts next year alone. So they will remain the world's factory. And I think infrastructure wise, we are years or maybe decades away. So, but the infrastructure is there now. It is the creation and the focus for the government. The policy focus is there. So maybe will take some time, but definitely I think this will develop beautifully.
So we have next question over here is, where do you see margin stabilizing for solar panel manufacturers and outlook on cell pricing?
So if you look at uh, the pricing right now, which is currently in India, is supportive of margin expansion on two accounts. One is the capacity utilization in India. Generally, for panel manufacturers, used to be around 40-50% only, because in monsoons there used to be a dip in demand, and then technology changed so fast that if you are putting new line, the existing line gets lesser utilized. What is happening now is, because we are exporting, so even if we have a monsoon in India, we have a global market to cater. Also, because the developers now, due to the LMM, have high demand, they are not focusing ke monsoon mein hum kam demand kar lete hain. So there is a demand across the year. So that generally means higher operating leverage, and hence operating margins naturally should go up because of that, even if we assume same pricing. Second thing is that the raw materials that we are importing from China, because of overcapacity in China, are going down, but the module prices in India are not falling at the same rate because of the protection by the government. Now, this protection of government would stay 2 years, 3 years, we don't know. But if that stays, that means higher margins than the normal 7-8% margins. People are making 12-13. Maybe they'll stabilize at 10-11. In cell, I guess the margins currently are insane, because you're importing, polysilicon or whatever the raw materials at 3.5 cent, and the cell is being sold at 14-15 because of Kusum or other programs of the government, which requires 60% value addition in our own country. That means cell needs to be made in our country. And as Vineet was alluding to, there might be a policy of approved list of cell manufacturers that also can come. So yeah, so incrementally, I guess short term or medium term, module makers are making also higher than historic margin. But if they backward integrate into cell, that is when they make their business model safer, and that will have a more predictable margins over the long term.
I think very important to understand what, and this is 2-3 times what Arvind has mentioned, that we have protection. And what is ALM? ALM is nothing but approved list of module manufacturers, which means that every plant coming on the public grid has to procure its modules from an Indian manufacturer, which is essentially 90-95% of the demand. And that is how well protected the industry is. And from a lot of promoters we met in the conference and within the industry, they believe that this ALMM should last more than 3 to 5 years.
It's already there in the industry. So we have a precedent.
We can take the next question.
So next question is that we have heard so many restrictions on the Chinese player. So what have you seen in the expo?
So in terms of restrictions, the country doesn't have a restriction on getting equipments to manufacture cell or module in our country. The restriction is on import of the end product, and the government would then restrict even cell import. That is what the policy ideally should be, because you need the ecosystem to develop in a country. And that is healthy if people catch up and make cells in India, then go back to making polysilicon in India. That's a dream which our country wants to achieve. In fact, anyone and everyone of the countries are wanting to, secure the supply chain. So these restrictions ideally should stay. I don't think there's any reason for government to reverse course. Because as Vineet, I guess one time was telling me, and which gave me a lot of confidence that these policies should stay, that the end power price, when you assume 50% duty or whatever duty you put on solar panels in India, the power prices just go by 10 cent. And in US, it goes up by just 5 cent, maybe 10 paisa in India, I guess, and maybe 5 cent in the US. So that is not going to materially impact the coffers of the government. But what it creates or gives the opportunity to our country and its entrepreneurs to have a very credible supply chain, create jobs in our country. And that is the mandate which the government wants the youth also to be employed in the sunrise sector. Why would it want to destroy an ecosystem which is just costing maybe a 10-15 paisa of the end power price, which we can absorb easily with the government finances improving? Maybe Vineet can throw or Piyush can throw more.
I mean, all said and done, the tariffs have not increased like what Arvind is talking about. We can look at the history last 2.5 years of bidding. After all the restrictions plus the duty imposition, the tariffs have been quite steady. So the end use, which is the power that we want to consume in the country, green, brown, whatever, as a consumer, we don't care. The tariff is not increasing. In fact, it is helping the peak tariff to go down. In summers, when you look at the spot prices, it used to be 15, 12, 13. Now, because of the influx of solar in the daytime, so there is enough supply in the daytime in summer season, which is helping the supply to remain to an extent constant. And that has in fact helped to reduce the overall spot pricing in the market. And generally, because it's a long-term 25-year fixed term PPA with zero escalation, I mean, unheard of in thermal or other sectors. So on a broad level, we are seeing a tariff steady and which are going to remain fixed for the next 25 years. So it's like a no-brainer. That's the next point, is to build the infrastructure. There is no second thoughts. Now that we have the market ready, the immediate thought will be to develop the backend chain. Yes.
Yeah, we can take next question.
Vineet, Mittal, this question is for you, that what is the future of battery storage system in India?
Definitely. I mean, I think Arvind and Piyush had touched upon that topic. The only concern with renewables is the intermittency. We don't get 24/7 continuous baseload power. If you look at all the current tenders in the government, generally they are all coupled with some sort of storage, whether it is pump storage, battery storage. There are talks about some vanadium red oxide batteries. So basically, the technology in storage and there is a lot of innovation. Cost has gone down drastically. Similarly, the pattern of solar, large corporates in the solar market have completely branched out into storage. Whether we talk about Chinese companies like Trina and Canadian, or Indian manufacturers and the large developers who have started adopting those in large scale. I think, I don't know the exact number, but somewhere between 3.5 to 4.5 rupees for a solar with storage is what the grid and the tariffs discovered in the tenders. So which is still lower or at least at the same level of the thermal energy. So I think energy storage will grow quite rapidly, one on the utility scale, but purely as a end user consumer, people will embrace energy storage for their own requirements, for charging electric scooters or fire vehicles. So the market is going to grow rapidly, no doubt.
Okay. So in the exhibition, have you saw any new technology either in the cell or the module manufacturing that can bring more efficiency if can brought to India?
Yeah, so I guess one day I spent completely with Vineet like a shadow meeting all his equipment providers, and I couldn't get my head around that every couple of years how the technology is changing so fast. I mean, there are equipment that are now being, shipped to our country, and the technology is changed in China. So that's the speed of change in technology. So one has to understand that's the biggest risk when one is investing in the sector is that technology is changing fast, and you need to keep tab of it and understand how it affects the company that you have and whether they are planned that technology shift properly or not. So one has to look at one has planned a 2 years kind of payback period for his equipment or not, because if there is any further payback period that one has penciled into their projections, it can affect them because technology can change and they will not be able to even get back the capital they've spent on the technology. So yeah, it is a good question, and I feel that is the monitorable that one should work hard on once they decide to invest in this sector. And which is and the other thing which is good for our country is that if you look at the major technologies around the world, our country though has been behind in R&D, but we've adopted technology whenever there has been stability. So if you look at the theoretical efficiency of the cell, that has now increased dramatically over the past 10, 12 years. Though the technology is still changing, but it is approaching theoretical levels where it would be then incrementally very difficult to increase the capacity. So we are now at the fag end of maybe the technologies will become stable, and hence uh, the equipment need not be scrapped if the efficiency is just 0.5% or 0.25% higher. So pretty soon we will keep on hitting those levels, and you cannot not invest in the sector by that I'll be the smartest one to invest last when the technology stabilizes. So you have to run that risk, I feel.
I'll just take 1 minute here. The technology change is happening fast, no doubt in that. People in China, the large manufacturers, are also facing the grunt of this. Equipment suppliers have realized that they cannot have a unipolar approach. I mean, whenever we talk to prospective equipment suppliers, they only talk about modularity. They talk about upgradation possibility in the same project, or maybe with smaller marginal changes in tools in future, say after a year, after 2 years. So they will come out with a roadmap that if certain TopCon is right now prevalent in the market, tomorrow if there is an HJT, the equipment is ready to adopt HJT. A year later, maybe there are a couple of new technologies called zero bus bar and back contact. So there will be certain changes, but it's not going to be 100% scrapping of equipment. It is going to be a kind of gradual incremental change on the module manufacturing, also on the cell manufacturing, which is going to be a large business in coming years. The clear thought is thought on modularity. So we believe that the equipment life will be at least 5 to 7 years clearly with minimum upgradations.
I think having spoken to so many industry experts and companies here, it is very clear that India currently stands at monoperk, which still has say 12 months of leeway. And while 75% of China's capacity is TopCon, as we move towards TopCon, we'll have another 10 to 12 quarters, or maybe longer, as has been mentioned. The technology advances will slow down. So over the next 3 to 4 years, or maybe 5 years, we'll see a fairly stable technology transition.
So maybe we can take a couple of last questions because the expo has closed and the security people are after our lives to end this. So maybe we can close it with the last question.
So one last question is that what is the margin difference between the company that makes module versus that company that makes cell and module?
I think module this was touched upon by Arvind. I would guess that module manufacturing would fetch between 10 to 12% EBITDAs, but combined margins would cross, I think, 30-35%. I mean, this
Which is the
an
current scenario, I
The
guess.
current scenario.
It should stabilize around 20-22% would also be wonderful. And
once capacity increases.
so we'll just like
Yeah.
to close the conversation with 3 takeaways that each of us has, maybe from the conference, if we can start from Vineet.
I think the modularity approach is the biggest takeaway here, where all the new technologies are being adopted, but not keeping room for improvement in the future. The craze or the followership, the fellowship for solar is increasing day by day. There's a clear indication. There is no dearth of talent now in the sector, at least in the global sector and the R&D space. And third is the influx of energy storage in a very big way. I think these are 3 main takeaways for me.
My biggest takeaway is at observing so many entrepreneurs coming here wanting to put up cell plant is, for the first time, I have this feeling that our ecosystem is now becoming broader and much more larger. Our entrepreneurs, given with the policy continuity of the government, want to do larger capexes. So that's wonderful to see. Second big takeaway is that these entrepreneurs are in for a good cycle where maybe their equipment cost would not go up so much as the Chinese industry is slowing down. Hence, there'll be manufacturer equipments which would want to target these Indian players who have this demand for growing their capacity. Hence, that will mean more support in terms of after sales, more support in terms of putting up the lines and cost. And the last is that the prices that we are seeing of the price the end solar module prices in India look more stable with the kind of developments that are there in our country.
I think I'll just end with one quick takeaway. Whatever pain China is in, I think the biggest gainer is India, and that will remain for the next 5 years. 5 years. So, think about a decadal theme. There are very rare times in your lives you'll come across trends and themes where there's government support, where there's access to capital for the promoters, and there's enough on the table for investors as well. So happy investing.
Happy investing. Thank you so much, guys.
Thank you. Thank you.
Thank you.
Thank you.
Thank you so much for joining in.